Stocks are hitting record highs and have already climbed 3% in the first week of November. How much juice is left in this stock market, and will the Santa Claus Rally take us even higher? In this video, I'll show you how I'm positioning our 2019 dividend portfolio for the rest of the year. I'll reveal data on how the stock market does in these last 2 months of the year and some factors that I'm watching. We're talking investing for the rest of the year today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. A special shout out to everyone in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Happy November, Nation. One of the best months for stock returns is here, and the market is already up 3% in less than a week of trading. Now, I've gotten a few emails asking what I'm doing with our 2019 Stock Market Challenge portfolio. And those of you in the nation, remember that I ended April with a warning about that sell in May phenomenon, how those 6 months from May through October are typically the worst for stocks. The summer months weren't too bad for stocks, though. The market was actually up 3% in those 6 months, but with some breathtaking ups and downs. In fact, I made just over $4,300 in 2 trades buying put options against the S&P 500 when the market hit those summer highs. I bought put options in July and September, selling when the market tumbled just a couple weeks later each time. But now that November is here, does that mean investors have the green light to get back into stocks until next May? What is the Santa Claus Rally in stocks, and how does it affect how you invest? In this video, I'll explain the Santa Claus Rally, how I see the markets through the end of the year and into 2020, and how you can use it to grow your dough. I'll also show you where we're at with our 2019 challenge portfolio and what I'm doing with to beat the market. I'm putting this video into our 2019 Stock Market Challenge playlist, so if you haven't seen those other updates, check those out. Along with some of the biggest investing channels here on YouTube, I created a $1,000 portfolio in January and will be tracking it all year long. To track my portfolio of dividend stocks, I'm investing $1,000 on M1 Finance, a no-fee platform that lets you pick your stocks and then automatically invest any new deposits across your group. And with the changes to commission-free trading on most websites out there, a lot of you have asked if I still like M1 Finance, even with a lot of the choices for free investing. I do still like it on that portfolio perspective that you get and that automated reinvesting across the entire portfolio. Basically, you can set your portfolio up to automatically reinvest any dividends or deposits across that entire investments group that you have and in the percentages that you set up. It's great for that long-time buy and hold investment strategy. Now, I'll leave a link to the playlist of videos below in the description. I'll also leave a list of the current portfolio of stocks in the description below as well, so make sure you check that out. Now, here's our dividend portfolio as of earlier this week with a 24.6% return since January. That's still well above the 20% year-to-date return on the S&P 500 and the 22% return on that Vanguard Dividend Fund ticker VIG. But the outperformance has come down a little bit from those first 4 months. Now, if you remember, we were beating the market by almost 9% through April on the strength in some of those Chinese names and some of the other stocks in our portfolio. Here are the 13 stocks in the portfolio now. 6 of the stocks continued to beat the market, with 4 of them more than doubling the market return. China Life Insurance has held up pretty well during the trade war, even if our other China investment, that's the iShares China Large Cap Fund, ticker FXI, is underperforming. Down here among the losers, though, Ford continues to plunge, though I truly believe if you can have the patience to let this one turn around, it's going to be a good long-term investment. This Alerian AMLP ETF has been a major disappointment, even as the 9% dividend yield on the shares turns the small loss into a gain. I still like this fund, though, and I'm actually going to be putting 10,000 in shares in my solo 401k account within the next week. Now, I'm not making any changes to the portfolio this month, and I want to get to what I'm looking at for investing through the rest of the year and into 2020. So if you want to see how I picked these stocks, check out that link to the challenge playlist of videos in the description below. Now I want to talk a little bit about what we're seeing in the market, some signals that you can use to invest, and what returns have been like over the next 6 months. Here's that chart again, research from the Stock Traders Almanac showing the average monthly return on the S&P 500 over more than 6 decades. You see that rough 6 months there from May through October, but with the exception of February, the November through April period is usually pretty good. November and December just tend to be a positive time of year as people start looking forward to the holidays and those end-of-year bonuses. And fund managers that might have shifted to cash in the summer start to push back into stocks, which really helps drive momentum. That February weakness is often seen as a little bit of a give back on stronger November through January period, but on average, a good time to invest. Now, the Santa Claus Rally is technically supposed to be the last week in December and the first week in January, where those end-of-year bonuses push stocks higher and then retail sales numbers give the market something to cheer. Other causes might be a slowdown in tax loss harvesting and an investor buying ahead of the January effect, another phenomenon where returns are generally positive in that month. Lately, the rally has taken on more of a general idea to mean just those last 5 weeks or so throughout the end of the year. Now, all these trends though, the history of returns by month, the Santa Claus Rally, none of it means anything though without looking at those market fundamentals. You remember last year we saw that huge market drop from September through the first half of December, so you can't just take this historical data as gospel. So if we look at some of the signals in the market right now, we actually see a pretty good picture for at least the next 6 months. The Federal Reserve cut rates for the third time in a year at its October meeting, and history shows that it's set up for decent market returns. This is a chart by LPL Research, and in 3 other occasions when it did this, stocks were up 10.1% over the next 6 months and 20% on average over the following year. Even better though is that Chair Powell said in that meeting that rate hikes would be pretty much out of the question unless inflation really took off. Now this all means that while more rate cuts might not be on the table, interest rates increases are definitely out. The November jobs report also came in surprisingly strong, with the U.S. adding 128,000 jobs in the month of October. What made this surprising though was that it was in spite of the October strike by General Motors workers that held the number down by upwards of 20,000 jobs, so we could see another strong number in the December report. Now, researcher eMarketer expects holiday retail sales up by 3.8%, making it the first $1 trillion holiday season and well above the 2.4% growth we saw last year. This all sets it up for a very positive environment through the end of the year and as we move into 2020. I'm betting there's a 100% chance the administration starts talking about another tax cut and some kind of stimulus as we get closer to that election also. Now, this isn't to say that there aren't risks that you shouldn't be watching for. That trade war with China is still simmering, even if the two sides have agreed on a phase 1 deal. Stocks aren't necessarily cheap at this point either, so even on that positive sentiment, I wouldn't expect more than a 5 or a 10% gain over the next 6 months. Now, as we work through next year, especially into May and closer to that election, things could turn quickly, so I'll update you when we get closer to that. Click on the video to the right to see how I used that sell in May strategy to get in and out of stocks at exactly the right time. Don't forget to look in the video description below for the first video on how we set up our 2019 Dividend Challenge portfolio and how to get started with these dividend stocks.